Hey everybody, Charlie Dobbins here for another episode in the Look Over My Shoulder series. And as you can see, the episode 3, we're already changing the plans. Things have kind of taken a turn over the last 2 weeks, which is what you can expect when you're in this business. For instance, we plan on having a deal under contract and bought within the next 6 months, and the chances are very good. I don't even know. I haven't even seen what deal it is yet that we're going to end up owning. So things change on a regular basis. And since our last conversation, something has transpired that I'm going to bring to your attention and walk you through it. And this will give you an understanding of how this business operates a little bit better. But let me kind of tell you what happened. Let me tell you what we're going to cover in today's series. First thing we're going to do is talk about a little follow-up to the conversation I had with Matt Amos. Now, if you remember from episode 2, there was a conversation with Matt about a particular property and what we were going to do. Now, the way we left that conversation was that I was going to draft an offer and get Matt an offer. Now, I can tell you right now, over the last 2 weeks, something has happened, so I held off on submitting an offer to Matt. Doesn't mean I'm not going to do it. I still plan on making an offer on that property. I just received some additional information that I've got to verify and some additional knowledge that I am going to need to dig further into for 2 reasons. Number one is to make sure that my offer is an accurate one, so that my offer reflects exactly what it is that I'm looking for in this particular deal. And then the second reason is I want to make sure that I'm doing this correctly. After the follow-up conversation with Matt, we're going to talk about the South Carolina brokers. And I'm going to give you an update on that and what's transpired over the last 2 weeks on that particular aspect of my search. We're going to talk about how to get the deal financed. And, that's part of the process I'm in right now. As I start thinking about making these offers on some of these deals, I've got to start thinking about moving the chess pieces across the board. And part of the chess pieces are, what do I do about the financing? I need to have a good handle on that when I'm crafting my offer. If I don't know how a deal is going to get funded, an offer that I throw out there could be crazy. I remember when I first got started in this business and I was making offers on just about any property that had 4 walls. I didn't realize that if I made an offer on a property that was 70% occupied, I wasn't getting conventional financing. So my offer of 60 days to close on our 60-day financing period was bogus. It was never going to happen. So you need to understand, in order to make sure that the deal gets consummated, you've got to make sure that your offer makes sense in light of the deal. And in this particular case, we're dealing with a pretty exciting, interesting deal. And so I'm starting to chum the waters with certain sources. And then finally, I'm just going to touch base upon the bird dogging and the wholesaling, another aspect of this business, but that's something that we're going to be just touching upon, so you can see everything that's transpired in my business over the last 2 weeks. So let's talk about the conversation with Matt. As you recall, we ended the conversation. I was going to get him an offer. Well, something happened on the way to the forum. While I was sitting in front of my computer, I tell you folks, I get emails all the time. I'm on so many lists. I get so many updates. You fly through it. It's great for those people that have attention deficit disorder. But in this particular case, I received an email from a broker out of Texas for a deal in Ohio. A deal in Ohio that was a low-income housing tax credit deal, just like the deal I was talking with Matt about. The properties even looked alike. But here was the difference. The Texas broker was showing 270 unit deal for a little over $7 million. And I was with Matt. My deal with Matt was a little over 200 units at $13 million. Now remember, you're not buying these properties based upon a per unit cost. You're buying them based upon cash flow. But that difference was so distinctive that I had to take a kind of a step back and say, hey, wait a minute, Matt, what's going on with this particular deal? Let me show you the email that I received. Here's the property with Midwest Apartment Portfolio with ARA, Affordable Housing, out of Texas. 270 units. they're nice looking properties. They're just like the ones we've been looking at with Matt. Four different complexes. You don't really get the economies of scale as far as the payroll goes, because you got to put people in different places. That's going to drive up the cost of the payroll. But nevertheless, it's a pretty nice property. Looks just like the ones we've been talking to Matt about. Actually, slightly different. These are garden style. A lot of Matt's are townhouses. But nevertheless, it was enough to really make me sit up and take notice. So what I had to do is I had to run the numbers on this particular deal. So I took the numbers from here and I put them into my spreadsheet to take a look at the financials. Now keep in mind one thing that on this particular deal, and I'm actually going to scroll you through it so you see exactly what I'm talking about. Bear with me. Take a look at here. Here's one of the deals, and this is what the broker's got this set up for 4 different properties. Look at right here, pro forma. Well, he's forcing me to do my analysis based upon the pro forma numbers, but I definitely will not make an offer based upon the pro forma. Before I make an offer to Mr. Fournier, I want to see his actual numbers and see what's going on in this particular property. I mean, he's got too many numbers rounded. Look at these expenses; they're all rounded. That's not going to fly for me. I want to see the real actual numbers. So I put the numbers into my spreadsheet, and here's what I came back with. Remember, if you all recall the cash flow analyzer, here's the cash flow analysis. I scroll down to the bottom here because I want to see these financial measurements. Look at it, it's got a 1.77 debt coverage ratio. That's unbelievable. That's fantastic. You're looking at about an 8 cap. Let me see if we do the where am I going? Down here in the cash and cash return before taxes is 19%. Holy cow. This is a smoking deal. Look at the double-digit numbers all the way through. Now the problem, a couple of issues with this particular deal. Number one is that I don't know where this property sits in the life cycle of the low-income housing tax credit program. The LIHTC programs are 15 years long. If this property is stuck in year 7, I'm going to have to stay in that program for the next 8 years before I can even request to take this property out of the program and take it to market, even if I'm allowed to do that. So because of that, I'm in kind of I look at these numbers, they have to be smoking because I can't increase the rents. The government is going to tell me what I can do with the rents, and that's a problem. So remember, these are based upon pro forma. I don't know where the property is in the program, but I do want to find out more. These numbers are very intriguing. So even though I am going to proceed with the offer with Matt, but I'm also going to proceed with an offer on this particular deal. So 2 weeks ago, I was just talking about one deal with Matt. Now I'm looking at 2 deals, the same type of deals. So this is now kind of gotten a little interesting. And over the next 2 weeks, I'm going to have more conversations with Mr. Fournier, the broker on this particular deal, to figure out what exactly it is that he's looking for. Now, just so you can see what I'm talking about, let's remember this one. This is our Matt Amos deal. Let me show you the financial measurements on this. 1.48 debt coverage ratio. Okay, that's a good debt coverage ratio, but look what happens. It jumps up to 2.12, and I'll tell you why if you don't remember. Then we've got down here the cash on cash return, kind of lame, kind of mediocre, but still solid in the first year. Okay, not all that great. Then it goes crazy. Then we start to see the thing take off. And that's because in the second year, we can start going up on the rents. Look what happens to the income. You go from 2.1 to 2.5 to 2.6 to 2.7 because we've now taken this property out of the LIHTC program. You've hit year 15, and now we're going to start getting into the market on this particular property. So I need a little bit more analysis, need to dig down a little bit deeper. Now, the other thing that you have to take into consideration is the fact that one of the reasons why I held off on making the offer with Matt is it turns out if I'm going to take this property out of the program, it's not as easy as Matt made it sound. Okay? Remember how we spoke and Matt said, oh yeah, well you're in your year 15. All you have to do is apply with the state, and then once they can't find anybody at that qualified commitment letter price, then you just get to take that property and take it to market. It's not that easy. You still have to request permission from the state. The state is going to ask you for your second born. Okay, so I want to know what the state's going to ask for, and I'm going to request all of that information be in the purchase and sale agreement so that I know I can get all this stuff from the existing owner in order to take it out of this program. So, here's more of that chess pieces, the moving of the chess pieces across the table. I've got to make sure that I know what it is that I need so that I can ask the current owner for it, because if I can't get it from the current owner, I can't take this out of the program. If I can't take it out of the program, I'm not looking at these great numbers. That David Fournier property looks a lot better. So those are some of the things. Let me just kind of give you an example of this. And let me give you an example of the different programs that you have to deal with. Here you are. For this particular program, if I bought this property, I now have to deal with the Ohio Housing Finance Agency. Those are the people that I have to file compliance forms with, and they're the ones that are going to tell me whether I can take this property out of the market or not. So the first thing I'm going to do is I'm going to get in touch with a compliance expert and ask him, what is it that I need to know before getting into this deal? Now, a lot of this information was tipped off to me by David Fournier when I spoke to him. So this is what you need to do. Call opposing brokers and play the two of them off against each other. You'll end up with some great information. All right, so that is what's transpired over the last 2 weeks. It told me to put the brakes a little bit on the Matt Amos deal. I'm not stopping altogether. But it also brought a new deal into the mix so that I might be making 2 offers now over the next 2 weeks. But I am going to do something in the next 2 weeks because I just can't sit around without making an offer on something. So that's where we stand with the Matt Amos deal. Let's go back and take a look at some of the other things. Now, once we've started talking to Matt, and now that I kind of have an idea of what it is that I need, and what type of properties we're dealing with, I can start thinking about different financing methods in order to get this deal done. Now, in this particular case, it's a beautiful property. It's currently owned by an insurance company. It has a huge value play that does not require rehab money. And for all of these reasons, this is a very attractive deal for some pretty good money. So what I'm going to do is contact a gentleman whose company specializes in debt equity arrangements. Okay, that means that he will go out and source the debt, probably find an 80% loan to value mortgage, and then he will go and he will source some equity and create an equity stack above that 80%, where he could actually get to 90, and he told me on the phone as much as 95% of the deal if they really like it. So that's very interesting to me. This is going to be a very large raise, and it's something that I've got to start thinking about how much money is it that my partner is going to need to raise in order to make this thing happen. So I've spoken to different sources, this one particular source, and this is what I've come up with. Let me show you exactly what I mean. So here's Brent Vargas. Brent is the president and owner of Triton Capital Advisory. Now, Brent's company is also UC Funding. So he's got 2 companies depending upon what deal it is that you need to work on. He's closing a lot of deals right now, some pretty interesting and creative financing ways to do it. But definitely this is somebody that you should have on your Rolodex as somebody to contact when you find a good deal. Now, keep in mind, when you're talking about a debt equity stack, when you're talking about mezzanine financing, let me show you some of the things that they're talking about. Joint venture equity. This is part of the structured finance approach with Triton, where they actually work with you to partner with you to help get a deal done. Now, keep in mind, don't bring Brent, some C-class property that needs, full gut rehab, and it's in a C area, in an area that nobody is investing in, like Detroit. You're wasting his time and you're wasting your time. So when you come across a particular deal, not only do you need to understand how to finance the deal, you need to understand, is this property able to be financed? So definitely think about that, and especially think about it before you contact a guy like Brent. In this particular case, this is a really nice deal. It's a nice property. I'd be proud to own it. And it's the type of deal I would bring to a source like Brent in order to make it happen. So keep him on your Rolodex. Look for the great deals. Find some awesome off-market opportunities, and then give him a call and see if he can put something together for you. So that's where we stand with the Cincinnati deal. It's now burgeoned into 2 properties that we can take a look at, and so over the next 2 weeks I am going to get these things off my desk and start to get the ball rolling on these transactions. So but I did have the conversation with Brent about getting this deal done, and he said send it on over, but before I do that, I've got to send him a confidentiality agreement, because I am under a confidentiality agreement with Marcus and Millichap. I've got to protect myself and protect the contract I have with Marcus and Millichap, and I've got to get Brent signed up on the same type of CA, as we call it in the business. So I'm going to send him over the CA, lock him up, and then send him over my numbers and the analysis and the property so he can take a look at it and determine whether it is something that he wants to do. Because he and I had a great conversation. Doesn't mean he's once he takes a look at the numbers, it's going to be something that fits his underwriting guidelines. We'll figure that out in the next week or so. Either way, it's not going to slow me down for going after this deal. This is a nice property. So let me see. The next thing we want to talk about is South Carolina. Now, South Carolina. As you recall, in one of our first look over my shoulder videos, I had sent off a bunch of email blasts to different brokers using the LoopNet source. Surprisingly so, it came back with about 2 brokers contacted me to talk about deals that they were working on in South Carolina. That was it. Very, very disappointing. Very disappointing result. So, change of plans. Now over the next 2 weeks, I'm going to be picking up the phone and I'm going to be speaking directly with some of the top brokers in South Carolina to really find out what's going on. Now let me tell you, what it's probably going to come down to is for me to get on a plane and fly down to South Carolina and sit across the table from some of these guys and really start to build relationships that way. But if I'm committed to this business, if I'm committed to getting deals done in that neck of the woods, that's what it's going to take, and I'm more than happy to go and do that. So I'm very disappointed with what's happened in South Carolina, but it's not going to. It's just a speed bump in the road. It's not going to stop me from achieving my goals. That is absolutely for sure. Finally, the bird dogging and wholesaling. If you looked on one of the past Monday morning reports, I showed you how I set up systems so that I can get automatic updates on particular deals. That particular alert led me to the justmultifamily.com website, and from there I started doing finding some off-market deals and speaking with the 2 brokers that I'm working with down there in Florida. And so I'm starting to blast some of their leads out to the marketplace, and that's great. That's a lot of fun. I'm glad I'm generating some activity for people interested in those deals for myself and for my company. But that's really what I'm doing on the bird dogging and wholesaling side. It probably takes me all of a half an hour to an hour a day just to generate some activity on that type of product, the bird dogging and the wholesaling. So, it's something that I definitely like to do. It's easy to do, and hey, you know what? I might land a deal, I might find a deal, it might be great. So I stay at it. You just got to keep at it, set up systems so it happens automatically, and just make it work. It's a lot of fun. Finally, next week's episode, we're going to be coming into 2 weeks into this deal. I will have figured out what type of debt arrangements and possibly equity arrangements that we've lined up for these deals. And then, on top of that, I now have to start talking to some of my equity partners, those people looking to invest in these types of deals with cash. And so that's what's going to transpire next. I'm going to be speaking with certain people about how we can make this deal happen, and how much money they can bring to the table, what flavor that money has. You've heard me talk about the flavor of people's money. That's something you want to take into consideration. If you haven't been to any of my training seminars, that's one thing that we talk about is understanding the flavor of people's money. So next week, I will have offers out the door. I will have spoken to debt sources, and I will be talking to the equity partners to figure out how we can put all of the chess pieces together, get them all on the other side of the table so that we can win this game and land a deal. So that is what's happened the last 2 weeks. I've got a lot of stuff happening in the next 2 weeks. Stay tuned. You'll be very surprised at what happens over the next 2 weeks, I am sure. Thanks, everybody, and we'll talk to you then.